Hey guys, welcome back. In this video, we are talking about AMC continue to run, the short squeeze signals, the gamma breakouts, and many more in this video. First, we're taking a look at this. So Adamir has made a shout out to Chris Nolan, which is obviously the release of The Odyssey. And we've seen how well it done with a media reported of 286 million domestic box office gross and 460 million at a worldwide box office. Now, what's more important about this is what it means for AMC, which is the stunning second week momentum for The Odyssey drives the most successful IMAX run in AMC theaters history. So from July 16th to July 26th, AMC recorded the highest IMAX revenue in AMC's history for the first 2 weeks for a single title. So once again, AMC is breaking records, and we're seeing how more and more people are continuing to go into AMC to view the movies. And we've already talked about how AMC is benefiting off of this box office. As long as we see box office not even having to improve, but even at a constant level of how well it's doing now, AMC will still continue to grow. But that's obviously not to mention the fact that box office is improving. So we're looking at a time where not only is the box office increasing, but the efficiency, and that's the key part, which is the efficiency, the leverage ratio of AMC is actually going up. And that's what allows AMC to ultimately grow more than all the other competitors in this space. And we're evidently seeing this right now. What's also interesting about all of this is that with everything that's ongoing right now, with how well AMC is doing, suddenly the reported short interest has gone down. Now, we've already known for a very long time right now, whenever you take a look at the self-reported short interest, we know that we need to take it with a huge grain of salt. The reason for this is because we've seen in previous cases of how firms are not mentioning even half or even a fourth of what the actual short interest for a particular stock is. Especially when it comes to a stock for AMC that has so many synthetics, we know that the short interest is not what it seems with the data that's being reported. But what's also interesting about this, and what we have to realize from this, is that in the past, prior to the April car squeeze, and we've talked about this in the past, cost to borrow was sub 1%. During the squeeze, cost to borrow peaked around 3.88 to 4.25% due to a lack of shares. Same level as AMC cost to borrow recently and suddenly reached. This might be a sign of Pentwater and Citron finally deciding to recall lended AMC shares. And so one of the biggest takeaway points from this is that we don't have to rely on the self-reported short interest to know whether or not AMC is going to switch, because we already know the synthetics with the naked short where that is for AMC. But even if we're looking at this and looking at past data, especially with the firms involved, remember, the car squeeze was triggered by Pentwater, and we've seen what Pentwater also has with AMC. And we're looking at this for the same thing that it's ongoing right now. And we know that the majority of real shares, and the keyword here being real shares, are of course held by the retail. So we're in the same position as a stock that has recently squeezed, with all the data aligning to one another. And so this is obviously a very, very peak signal of what's going to happen for AMC and exactly what we are looking out for. And so we have to realize with this right now, with the self-reported interest showing signs of a squeeze, with the naked short at a peak never seen before, there are so many things happening right now indicating for the squeeze of AMC. What's also important is taking a look at some of the prices that the shorts are afraid of. Tell me the run-up start above 250 without telling me. That dark black rock algo in itself, when we touched it, auto covering starts at 263. So what we see from the chart was when AMC reached 2.5, you can see the instant sell-off happening. Now, bear in mind, this isn't of course done by retail, because the odds of this happening is extremely low. It would mean that every retail seller decided the moment AMC touched 2.5 that we come in as a collective to sell all our shares, because it takes volume simultaneously to drop AMC to this level. And so this is obviously done by very certain individuals with a large amount of shares, and especially with the algorithm. And so it's a very key indicator of what 2.5 means. Now, what's important is today we actually closed above 2.5. We closed at 2.51. You can see the post market is at 2.5, seeing them trying to drop the price further. But that in itself is just highlighting once again how we are at a crucial level. And so this algorithm really proves that. What's also important is understanding the gamma update for AMC. Now, we are aware of the calls for 2.5, we are aware of the calls at $3. And so for AMC right now, the fact that we are pushing above these levels, the fact that gamma exposure for AMC is increasing like we are seeing right now, and we've seen what gamma level being breached has happened and done to AMC in the past before. And so to take a look at AMC right now and to take a look at AMC kind of going further ahead and seeing the momentum climb and go along with it, again, indications are aligning with one another, but also it's talking about how we are at a very crucial point. This is what we talked about with when everything aligns for AMC, the fundamentals, the technicals, the psychologicals, and everything right now, like we have talked about, are all aligning. You can also see here another indication of why we talked about how 2.5 is important. You can see orders are getting filled at 250 and above, but not reflecting on the chart. So we've actually seen on level 2 data where shares are being bought. Now, a lot of these shares are then, whether it's done dark pool, whether it's done post-market, it's an indication of how people want shares of AMC. They're willing to pay a higher premium than even the market price. Now, what they then don't want to see is the AMC to actually take advantage of that. So they are willing to buy AMC at a price above its current market price, but what they aren't willing to happen is for AMC to actually reflect that, and then for AMC actually to climb along with that. And that itself is also, like we've said, a very important point to really pick up right now, because it shows how crucial AMC in terms of the point it's in right now, and just the demand for AMC right now is there, not just for the retail, but for everyone in general. And we are just seeing more and more institutions trying to accumulate shares. What's also something that is happening right now, especially what we see with happening in Japan, is of course with the price of yen right now, we are seeing how hedge funds are accelerating the sale of all assets to unwind the yen swaps, which have a direct impact on AMC. Now, bear in mind, it's something we talked about in the past already, how the yen carry trade will have a massive impact on AMC. The reason for this is because they bought these shares and they had it as collateral to then short AMC. However, if they need to sell these positions, then they will need to originally cover their original assets to actually then make sure all of these things go according to their plan. But by doing so, they are selling the assets that they use as collateral on AMC. So we're seeing how this is obviously triggering an effect, and this is why we're seeing the weakening. You can see one of the reasons for why we're seeing this so-called low short interest on AMC right now is because they can't afford to openly short AMC because of all the things that's ongoing right now, because of all the positions they're trying to unwind to cover up the mess they've made up in other levels. But that in itself is causing the AMC situation to get even bigger. You can see AMC retail ownership 70%, IMAX 0, Cinemark 0, the people stock. And it's very important to know this. Now, 70% in my opinion is still a very conservative understanding of what the AMC retail ownership is. The reason for this is because all of these other platforms have not aligned with one another to show us what the true retail ownership is. But over the years, institutions have bought a lot of AMC shares, but they are of course synthetic shares, which has really messed up the whole system and which has really not allowed us to understand where the ownership is. But what we know is that the real shares of AMC are obviously held by the retail. But that goes back to the point we talked about previously about how the short interest that we're looking at right now is nowhere near what we're expecting, because the real shares is owned by AMC Apes, is owned by the retail, and what we're looking at right now is just a bunch of synthetic shares floating around. And you can see with the usage of dark pool, where we saw for the first time in history, the majority of the US stock trading occurs off exchange. And this is something that is impacting AMC. And in fact, I do like to believe that AMC is probably pushing this number up on its own, because the dark pool usage we're seeing on AMC has been absolutely ridiculous. Is why we talked about earlier about how price being traded above 250 is not actually reflecting, because they're trying to utilize dark pool, they're trying to utilize post market, and that itself is something that we have seen happen for quite a lot. And one of the things that this can obviously do is how it managed to get AMC to not move a single percentage, despite the fact we saw 33.39 million. Now, the odds of this happening is 0.01%. However, what you'll see is that for the past few years, it has happened to AMC so much. And so when we talk about AMC being manipulated, when we talk about the corruption, when we talk about the algorithms, this is exactly the proof that we need to see to understand everything that's ongoing. And then you can also see here, as long as they control the flow, it won't run, is a misconception of reality. A suppressed share price excellent earnings report like Q2 will eventually yield institutional ownership exceeding 100%, forcing the government to act. I'm in no hurry. And just like we talked about with what happens with AMC. Firstly, earnings report, we've already talked about this, how great it has been for AMC, and continuously how great it will be for AMC. But also, it's knowing the fact that right now, what we are seeing is just how more and more institutions are wanting to buy. And earlier, we talked about the synthetic shares flowing around. We talked about how institutions are buying up synthetic shares as opposed to the real shares. And so we are going to be seeing the ownership, the total ownership, not just talking about retail, not just talking about the institutions, but everyone involved. It will be more than 100%. And that's when we'll see the true corruption and the true situation that AMC is in. As we're talking about the fundamentals, when taking a look at why institutions want to buy, we have to understand this. AMC's cash on hand is increasing significantly, that the system can't keep the price locked this low much longer. And AMC won't need to do any offerings to pay debt because that's under control. Now, we talked about this shortly in the past before, but we have to understand that AMC is in a good position right now. We've seen their cash on hand, we've seen how well they're doing, we've seen the cut in the operational cost. And what all of these means is just that AMC will have the ability to then do multiple things, and it will cut their chances. Not to say there won't be any more offerings, something I'll talk about later on, but it will cut their chances of doing dilution in order to raise money, because they themselves will have the money available to do all the things that they need to do. And what we then see is just how that has increased the demand for AMC shares. And you can see the AMC critics who talks about the adjusted EBITDA ignores the high interest expense. And what we are seeing right now is just how it's the key for AMC, because it shows how we're cutting down on the debt and how we are improving on the interest payment. And what's even more important about this is that it's not just affecting the retail shareholders, but it shows the cash available to service debt before financing costs to the lenders/bondholders. And that's very important, because what we see here is an article talking about how AMC rolls out red carpet for debt investors to trumpet rebound. And this is a very important fact. And this goes back to earlier of why I said we can't rule out the chances of dilution. Now, I've already given my opinions on dilution and we'll quickly go over it, but I'm not saying that dilution is something that we want to see. I do agree that dilution is typically bad, and it does have also a negative impact on AMC, but we can't argue the fact of how it has allowed AMC to not only survive bankruptcy, but accelerate as a company itself. And what we are seeing right now is how more and more investors are interested in AMC. And it's why we talked about earlier with the adjusted EBITDA, with the fundamentals of AMC, how we're seeing this happening and why the potential is still there. But more importantly, why we talked about the demand for AMC is increasing because of how well we are doing. And this goes along to the AMC Go plan, which started in 2024. We actually covered it on this channel when this was rolled out. Now, when the AMC Go plan was first rolled out, a lot of people were very, very negative about this because they thought they should use the money for other things. But we've seen how well this is done. If you are excited, if you are very happy with the earnings report AMC is reporting Q2 and all of the news that we've seen recently, like record revenue, you have to understand that this wouldn't have been possible had AMC not done the AMC Go plan. So the very fact that we're doing this and we're still doing this and it's allowed AMC to grow is just the showcase of how well AMC is using their money and why this is going to continuously accelerate AMC and really propel us to the next level. And then you can also see if we are seeing the naked shorts don't exist and that the price drop and sell off from AMC from all-time highs, while the OBV is still looking at an extremely high level, then that would be what we're seeing for AMC. And it's just the showcase of how we are not a conspiracy theorist and we are seeing the naked shorts and manipulation happening for AMC. As always, none of this is financial advice, and I'll catch you guys next time.